All right, guys. Once again, you're welcome to La Prince the World Academy. My name is Prince Ikilowe, and for those of you who are new to trading, what you're seeing on the screen is the profit for this trade. I'm making $50, and I don't want you to focus on the amount, my trading capital, and even the amount I'm making, but I want you to focus on the strategy that is giving me this profit. So let's go to the strategy. Now, if you look at this market, let me go to 4 hours time frame. If you look at this market is a downtrend. This trading strategy is called smart money concept. All right, this is how smart money trades and make money. All right, you trade like the institutions. Now, if you look at this market, is a downtrend. Why did I say it's a downtrend? Because it was an uptrend, but all year, if you look at it, market broke through our trend line and give us change of character. Now, for a smart money, as a smart money trader, when you look at their chart, the first thing you want to know is market structure. What is this market structure? Is this market a downtrend or it is an uptrend? Once you see that the market is a downtrend, what do? You look for sell opportunities. And then if you see that the market is a downtrend, you look for, an uptrend, you look for buy opportunities. So in the case of this market, this was the highest point this market got to. And when the market tried to, it was doing higher high and higher lows. You see, it was doing higher high and higher lows until when it got to this point, it could not clear this. It could not clear. It stopped here, and instead of the market to come back and give us a new high, it refused to give us a new high, and then it started doing higher high, lower lows. Market came down. It could not give us a new high. Instead, it gave us a new lower highs. This is a new lower high, right? Now it came down deep, clear all these lows. It means that this time around the market has changed character. This is what we call change of character. So automatically, once this change of character happens, you know that the market is now a downtrend. So what do? You look for sell opportunities. Now look at my trend line here. This trend line I have here, this trend line. So what did retail traders do? Retail traders, let me zoom it a little bit. Retail traders tend to take trade because of this trend line here, right? When retail traders, what we do is when price get to this line, we say, okay, I'm a trend line trader. Market is on my trend line. I need to trade here because market is my trend line. You know what the market do? The market sweep the liquidity. So as a smart concept trader, smart money trader, your concern is market structure, and the next very important thing is liquidity. What is liquidity? Liquidity is all about where people, these institutions or retail traders place their trade. This is the liquidity. So you need to allow this liquidity to be swept. All right, it's also called liquidity grabbed. So the smart money, the market makers will clear the liquidity here. It means that why everybody is, the whole world is, all the retail traders are eyeing this trend line. Some of them will put, some people will place a buy, a sell, a limit here. So they clear all the sell limits. Some people even put a buy stop to buy, push the market to the upside. So taking the market is reversing to the upside, taking maybe their profit is going to be this high. But right now, the market has cleared all these stop losses and then crashing. So what you need to do as a smart trader, smart money trader, you allow that liquidity to be swept. Make sure that you don't place your trade here. Allow this liquidity to be swept completely. Let it go deep, as in it will behave as if it's going to the upside, but it's not going to the upside. Once the liquidity is swept, and once you see sign of rejection candlestick coming, you now switch to lower time frame. Like, let's start with since we are looking at 4 hours time frame, so let's look at 1 hour time frame to see if we are going to see three candlestick pattern that is called fair value gap. All right, it's called fair value gap. So if 1 hour candlestick is not giving fair value gap, I switch to lower time frame, like 15 minutes time frame, to give me fair value gap. So what is fair value gap? Now, fair value gap is a three candlestick formation that forms after the liquidity is being swept. So like this now, this one is the first red candlestick. All right, you take note of that. Now you put a line, this horizontal line, on the low of the first candlestick. After that, you look out for the second one. Look at the second candlestick, and then the third one. This is the third one here. This one here is the third one. You now put the line on the low of the high of the third candlestick. So this the market crashes, giving us fair value gap. So we expect the market to come back and retest back to this fair value gap, this space, this two yellow line here, this line here, yellow, inside this box now. Once market retraces back to inside this box, sometimes it will even come back to this place. This place is order block. This is the order block. Sometimes it may come back, but your interest is let the market come back to inside this fair value gap because it has created a gap. Make sure the two candlesticks, the third one and the first one, is not overlapping each other. There should be a gap. That's why the name called fair value gap. So once the market give you this fair value gap on any time frame, you now look for market to pull back to this box. So the market actually pulled back, in fact cleared our fair value gap, and then before I play this trade, I switched back to lower time, like 1 minute, all right, 5 minutes. So I saw that the market, though cleared, this is where we are supposed to trade when the market is coming. But if the market is coming with force and is not showing sign of turning, you don't need to struggle with the market, let it go. But now I saw that the market clear our fair value gap, but with 15 minutes time frame, you can see that after crossing it, it came back and closed on top. So that's a sign that, look at that, the sign that this market may just likely to take stop losses again and then before start going to the downside. So I place all my positions here and the market is going to the downside. My take profit is 1:2 ratio. All right, 1:2 ratio. So it means that my stop loss is $13, $13.55, and then my take profit is $27. All right, it's a very simple 1:2 ratio, scalping strategy. You can use this thing to make a lot of money for yourself. All right, so this is how the trade is playing out. I can close the trade and I'm still making profit, but it's 1:2 ratio. So your stop loss, once you place the trade, your stop loss is going to be above the formation, above this place where the fair value gap. Like this is the first candlestick, this is the second one, this is the third one. So you have to put your stop loss above this liquidity, this order block where the fair value gap actually took place, here above here, so that in case market retraces back, sometimes the market may violently retrace back to this place before crashing to the downside. So guys, I hope this video helps. Don't be trading on those obvious levels. Trade, allow the market to, you can apply this in forex, very perfect. You can apply this in indices, you can apply this even in crypto. All right, for those of you who have not joined the La Prince World Academy, you are really missing out, because here, when you join the academy, you get detailed explanation of how this market is being traded. All the students, there's no student who have joined us that doesn't get value. So you are missing out a lot. So I want to encourage you to join the La Prince World Academy. Use the link on the bio to create your Deriv account, so you can trade forex, and also use the link on the bio to join our Telegram community, so that you can be joining our weekly free training classes. All right, guys.